In this video, I'll be going over the fundamental factors that you want to look for while picking stocks. This is part 2 to the how to pick stocks video. The part 1, I went over technicals. This time, I'm purely going to be going over fundamentals. I'll still be using STX as an example, just to show you what a quote-unquote greatest winning stock profile looks like. Or you could say super performance profile. So I have the price chart open here, but we're not going to be looking at that. I'm going to be opening FinViz, and today I logged out, so I'm on the free version to show that everything I'm doing today for fundamental analysis can be done on FinViz with the free version. So I'm just going to go to the search bar and type in STX. And if you scroll down to this bottom panel, you see lots of stuff. There's a lot to go over, right? But to start off, we have market cap in the top left. Nothing else too important over here. But really, what is important about the fundamentals? The first thing you want to look for at fundamentals is the earnings per share growth quarter over quarter and the sales growth quarter over quarter, which you can see down here. Generally, a simple rule is you're going to prefer above 20% on both. If a company has triple digit earnings per share growth or sales growth, that is explosive and very rare, right? And often, if it is, if it does show up, it's often unsustainable. But if it is sustainable, I mean, the company will grow explosively. Anyways, above 20% is a great point to be. So here we can have 72% and 21% sales growth quarter over quarter, and earnings per share growth quarter over quarter at 72%. Absolutely huge. That's what's driven this stock to make such a huge move, is its huge earnings growth. So the first thing we look at is earnings per share quarter over quarter, sales quarter over quarter, and then margin. You want to see positive margin for a few reasons, right? You can have all the sales in the world, and if your margin isn't good or increasing, it doesn't matter. The company won't be able to expand well off of those sales, right? So margin is the important third factor. The main three factors that are most important are just earnings per share, sales, and profit margin. For the next thing we're going to want to look at is the annual earnings per share. You're going to look at the estimate for the next year. You want to see that the next year's estimate, which is where my cursor is now, you want to see that the next year's estimate is above preferably 15% plus growth. Because, you know, if next year it's estimated that the company's gonna not grow or barely grow or shrink in earnings, that's not a very good thing. That's that's not a stock that's gonna likely make a strong move, right? You want positive anticipation in the moment and going forward. So that's important, number 2. Number 3 is going to be industry group. Industry group is pretty important because the majority of the greatest winning stocks have been in here. I'll go through them real quick. So you have retail, tech/computer related, which would fit STX into that umbrella. Leisure/entertainment, and medical/biotech. Those industry groups over time have netted the greatest winning stocks most consistently. So if your stock is in that industry group and it has all these, if it has great earnings per share and sales growth, and they have good margins, etc., it's a pretty good chance that that stock is gonna move well. Um, Moving on, the stronger the industry group is as well is very important. So, like for example, STX is in one of the strongest industry groups. That contributed heavily to it being able to move at such a huge rate, moving 65% in 36 days, was mostly because it was in one of the industry groups that was experiencing the most explosive growth, right? Um, Number four, a huge bonus on top of everything I've just mentioned is if the stock is IPO'd in the previous 10 years. Because if you've had a stock that's been around for 30 years and it's just been doing the same thing, odds are they're not gonna click and just figure something out and turn around everything. It did happen to Apple. It went sideways for a while and then it turned around and figured out everything. But I mean, frankly, it showed all these factors before it did that, except for the IPO factor. So the IPO factor is a strong preference. You know, it's like 90% of the greatest winning stocks had IPO'd in the previous 10 years, but it's not a hard cutoff or anything. None of these fundamentals are too much of a hard cutoff. But if we go to STX hadn't IPO'd in the previous 10 years, but it absolutely soared. Now, I could show you here, I'll show you a stock in STX's industry group that had actually met a lot of these factors, but was a recent IPO, and it soared, it took off. So here, this is SNDK. If I go to the weekly, we can see in February of 2025 is when this stock IPO'd, and it launched. So when you have all of these fundamental factors stacked up, the gas in the engine is the gas in the gas tank. It's so full of gas. It can go. Sorry about that. It can go very very far with the fundamental factors it has. That's kind of a big determining thing, you know. Lots of stocks can just move 5-10%, you know, this way, that way, yada yada. But for a sustained huge super performance move, a company needs to provide evidence, right? And that evidence comes through their earnings, their sales, their margin growing, and them making more and more money, them expanding each earnings report and whatnot. So you have the fundamental outline, you have the technical outline. You combine these two, and you can find entries on stocks that move, like the stock on my screen, from $50 to $350 in less than a year, which is just incredible. Or STX, which moved 65% in 36 days, which I was lucky enough to catch the move on. So the key is in the hybrid approach of fundamental and technical analysis. Technical provides you the data to gauge your entry, right? Your timing. That's probably the best way I'd put it. Technical allows you good timing. Fundamental allows you proper long-term substance. I'm not sure how to word it, frankly, but yeah, for a stock to make a long-term move, it has to provide huge earnings consistently, or at least good earnings. But that's going over fundamentals. That finishes the how to pick stocks video. If you found value, please subscribe to my YouTube. And thanks for watching. I hope you enjoyed. Bye-bye.